Imagine buying a bank that is making billions in profits, but you are still paying relatively low prices for it. Is this a warning sign or an opportunity? That's what we are going to analyze today in our stock of the week. We are going to analyze Equity Bank. This is to make information accessible to any investor who wanted or who wishes to invest in the banking sector, so that they can consider if this is a thing to go for or not. So about Equity Bank, we are going to break it down in terms of the numbers and also the valuation of the shares, so that it can enable you as an investor to make informed decisions. As always, this is for educational purposes. It is not an investment advice. You are meant to do your research before you invest in any company. So let's go down. Equity Bank, how do they make money generally? We need to know how they make money before we invest in it, because that is where our dividends come from. When the company earns profits, that is where dividends to the shareholders come from. So Equity Bank make money in three main ways: through interest on loans, through a transaction fees, and through regional operations, since they operate in across different African countries. Let's talk numbers. According to the recent trend of Equity Bank, it has been reporting a stable profit, which means the company is doing well. Let's see the price earning ratio. This shows you how much you are willing to pay for a shilling of profit made by Equity Bank. So if the price earning ratio is too high, it normally means that the share is overvalued, or there is opportunity for more future growth of the company. If the price earning ratio is low, that always means that the share is undervalued, or the company has no or limited future growth. For Equity Bank, the price earning ratio is between 4.7 to 4.9, which is relatively low compared to other banks in the banking sector. So that means that the share price of Equity Bank is undervalued, or there is no opportunity for future growth of the company. It can either be this or that. It cannot be both. So that is where research comes in as an investor before you decide to invest, or before you decide to buy shares in Equity Bank. Okay, so for a shilling of profit from Equity Bank, it means that you are going to pay 4.8 Kenyan shillings, which is relatively low. And if this means that the share is undervalued, it means that this is an opportunity for beginner investors to hop into the market and invest in equity shares, because it is affordable. It is quite affordable. You don't need a lot of money to start, and you don't need a lot of resources to be a shareholder. Why is equity stock interesting right now for investors? It is because of strong profit growth. Number two, there is a lot of regional expansion and the digital banking dominance. Also, it pays dividends, so that is why it is attractive. So today, let's agree that don't buy a share from a company because it is popular, but buy because you understand how they make money and how the company works. And that is why we come here every week to break down a stock, which we'll call stock of the week series, to make it simple and understandable to everyone before they choose to invest. If this is what you are interested in, following along the stock of the week series and other simple investment tips, consider subscribing and following, so that we can build a community and build your wealth the smart way. Thank you for watching. Bye.